Today we have Jason Rogers from Newland Chase. Jason is the Vice President and Senior Global Immigration Counsel at Newland Chase, responsible for overseeing client immigration programs and providing high-level consultation responses. Jason applies his diversified depth of knowledge of corporate immigration to produce complex and innovative immigration solutions that meet the needs of his clients. We're also joined by Davyd Fisher, Director of Tax at Grant Thornton. As a chartered tax advisor, Davyd has a broad knowledge of UK taxes, although his in-depth specialism is global mobility services. Davyd works with a large number of clients, helping them mobilize their employees internationally. He advises his clients on a variety of issues, including assignment policy and design, cross-border taxation, and social security issues and compliance requirements. And last but not least, we have Topia own Nishant Mittal. Nishant is the Senior Vice President of Topia's business travel and distributed workforce solution, Topia Compass, and is responsible for strategy and growth. Nishant joined Topia as part of its acquisition of Mineo, a technology company he co-founded and led. Nishant brings extensive experience in business travel analytics and change management from working with Fortune 500 companies. With that, Nishant, I will hand over to you.
Holly, thank you very much. Good morning, good afternoon, wherever you guys are. Welcome and thank you for participating. Davyd, Jason, what a pleasure. It's good to see you both again, and thank you for joining me on stage today. Now, as if last year has not already been a normal year, amongst all of that, we had the big bomb drop with Brexit. It's something that I think we were all waiting for. It was coming, that was not coming, then it finally came Jan 1, 2021. And that has obviously made lives of folks around various organizations a tad bit more complicated as it relates to a number of different areas. So I am really excited, Davyd and Jason, today to talk to you about what do you think are some of the tax and immigration implications of this Brexit that has happened, and what you see happening right now in the universe out there, and what do you expect will happen, as the world starts to go back to normal and in the days, years to come. So with that, obviously Brexit, big deal. More than 6 million people crossing borders, going from UK to EU. So cannot be a small thing. These are people that UK employers did not have to worry as much about, or EU employers did not have to worry as much about crossing borders. So big deal there. Obviously the rules are complicated. So I'm looking forward, Jason, to hearing from you, especially from an immigration perspective, what you're seeing with the different blocks of countries and how they're banding together, and looking at time that employees may be spending from UK into EU, not just for work, but also for personal time that's spent, and like how that impacts. Because from at least what I hear, the risks and the penalties seem to be quite large. But what do I know? You guys are the experts, so looking forward to hearing from you. So Jason, tell us more about all the immigration implications of Brexit that you've been observing on the ground.
So I think from an immigration standpoint, certainly we are starting to see a lot of complex questions give rise from our clients, especially as we have started seeing business travel start to pick up, since the beginning of the year. Again, due to the COVID restrictions, we aren't seeing, a ton of business travel yet, but we are starting to hear from our clients specifically around preparing for a business travel in this post-Brexit world that we are now living in, and what our clients can do not only to start preparing individuals for the new rules and regulations, but also start preparing their own mobility, immigration, and travel programs to address this as well. I think the first thing we have to talk about when we talk about business travel in this post-Brexit environment is the Schengen rule around the number of days that a UK national can travel into the UK, or a UK national can travel into one of the Schengen countries without needing some type of long-term work or residence permit. And certainly when we're trying to make the distinction between, is the visitor entering the EU entering as a business visitor, or do they require some type of work authorization? Certainly the number one, I guess, defining rule that we have to look towards first are the duties and the activities that individual will be undertaking. And we'll be talking about that part just shortly. But first, we have to understand if the visitor, if the UK national can actually enter the EU, the Schengen area, without a long-term residence permit. And this all hinges on the number of days that individual may have spent previously in the Schengen area to determine if they are able to enter, and then if so, how many days can they enter. So certainly now, as a third country national, UK nationals do fall under the Schengen rules, which allows them in most instances to spend 90 days within the Schengen area within a rolling 180-day basis. So basically, when a UK visitor enters the EU they now can spend up to 90 days during the next 180-day period as a visitor without needing any type of visa, whether it be a short-term visitor's visa or maybe a long-term residence authorization. And again, for most of the locations, you'll see for 26 countries on the screen in front of you, the number of days are counted cumulatively. So, 5 days spent in Austria, 5 days in Belgium, for example, would equal 10 days altogether in the Schengen area. There are 4 countries that are currently exceptions to this rule. You'll see those on the screen as well: Bulgaria, Croatia, Cyprus, and Romania. These days spent in these specific countries do not count towards the overall 90-day limit. So if someone does spend, for instance, 10 days in Bulgaria as a visitor, that 10 days is not counted towards the 90 days allotment that individual can remain in the Schengen area. And certainly we are starting to get a lot of questions about how do we track, how is this 90 days counted? And essentially the easiest way to keep this rule in mind is to look at the date of entry for a visitor, count back 180 days, and during that previous 180-day mark, that will tell you the number of days that individual will be allowed to remain. And again, as Nishant was saying, all days count, all days spent in the Schengen area will count towards the 90-day allotment. This is also questions that we are getting, especially for those individuals who travel to the Schengen area, both for personal leisure reasons, as well as maybe for business purposes. And the question is time spent as on my leisure trip, is my 2-week vacation counted towards this 90-day allotment? And yes, it is. So if you do have, a business traveler who also will be traveling for personal reasons, make sure that they understand that day or those days will count towards that 90-day allotment. Also, weekends also count. If you have a traveler, an employee who may be spending, multiple weeks within the Schengen area for a multiple week business trip, those days spent in the area, Saturday and Sunday, for example, they may not be working, they may not be attending business meetings, they may not be meeting with clients, but they are counting towards the 90-day allotment. So again, those long-term business trips can quickly add up when you're talking weekends as well. And so these are certainly days to keep in mind. David will speak to some of the other consequences around the longer you stay probably opens yourself up to additional requirements. But from an immigration standpoint, once you do reach that 90-day threshold, the individual will have to depart the area and cannot re-enter as a visitor until that 90-day allotment has been reset. And certainly there are specific fines and penalties associated with an overstay. If, for example, you have a visitor entering with 5 days remaining, he or she stays in the Schengen area for maybe 6 days, very likely upon departing the Schengen area, they will be flagged up by the immigration officials and will have to pay some sort of fine. Certainly, a small overstay will not probably lead to any severe penalties or severe fines, but certainly if we have individuals who repeatedly do this type of overstay, certainly are looking at higher and higher fines, and eventually the individual traveler themselves will likely to face a future travel ban of up to 1 to 3 years of not being allowed to enter any of the countries within the Schengen area. So this is something that individual countries are tracking very closely. All passports now are scanned by the entering country, at the time of entry, and also at the time of departure. So officials are certainly counting these days, and so it is something to keep a close watch on, because 90 days can certainly add up very quickly. In terms of immigration and some of the more important high-level points that you need to understand and just think towards in the coming weeks as travel, in the coming months as your travel program may resume. Certainly now, UK nationals are subject to the immigration rules applicable both to visitors, which we just spoke about, the 90-day rule, and also workers as well. So the freedom of movement in terms of being able to enter and then work in any of the EU countries is no longer in effect. And so a UK national will be subject to the immigration rules for working within that host destination now as well. And again, there is no visa requirement simply for visiting, as long as the stay remains under the 90-day Schengen allotment. But any days that extend beyond that 90-day, or if you have an individual who's looking for a more long-term impact, that individual traveler will need not only their valid passport, but some type of now visa, long-term residence permit, long-term work permit in order to enter the Schengen area and continue to work. I think some of the immigration requirements themselves, which make this even more complicated, is that the rules around the immigration requirements will vary from country to country. There isn't a set rule that is applicable to each of the member states of the Schengen area. And so you are looking at having to look at the rules, the immigration regulations, the labor regulations of each of those destination locations, and what may be considered an allowed business visitor activity in one location may not in the next. So each trip, each destination needs to be assessed and reviewed individually to make sure that those immigration requirements are being applicable and applied to correctly each time. We are starting to see, however, in terms of the trade agreement that was entered into effect at the very end of 2020, did make room for exceptions and exemptions for certain activities within the now post-Brexit work environment. These activities may exempt a UK national from having to obtain a work permit. The trade agreement itself certainly gave recommendations. It's now up to the individual EU countries to interpret that trade agreement as they best see fit. Now we are now several months into 2021. We are starting to see more of these exceptions and exemptions become clear, which is very positive for UK nationals. And so there are certain activities which normally would require work authorization. I'm thinking about installation of machinery, repairing machinery, those types of after-sales support requirements that normally may require work authorization, but this trade agreement is starting to be interpreted in a way that most locations are allowing exemptions. So again, this is why it's very important to assess each individual traveler, his or her activities, each trip based upon the destination location to see if work authorization is needed. We certainly are encouraging our clients to review each business traveler. This also is very specific. We're talking about cross-border commuters as well. Individuals who may reside in the UK who may travel very frequently to a specific location within the EU, whether it be one country or multiple countries. Again, we need to evaluate, or you need to evaluate, to make sure that the activities undertaken is sufficient to be done as a business visitor, or if there might be long-term immigration requirements that have to be adhered to. If you do have, speaking to that final point, if you do have UK nationals who have frequently been traveling to the UK under some type of commuter arrangement, if they have been working, in this commuter arrangement on a long-term basis, and this action was in place prior to the end of the transition period. So if this was in place prior to December 31st of 2020, most locations are allowing that individual to continue to come in and work without needing work authorization. However, most of the host locations are requiring that some type of application be filed to establish and present and prevail the existing working and travel relationship that was in place prior to the end of the transition period. So if you do have those frequent travelers who have been traveling and working, make sure you look at the destination location to see what action you may need to take in order to preserve that status. Most of the EU countries have established a deadline of June 30th of this year, by which those applications need to be filed. So you have approximately a month and a half or so in order to get those applications in and prepared to preserve that status. And then just some, I guess, some long-term hints or tricks that we are advising clients as to how to prepare their immigration mobility business travel programs in a way to adapt to this new immigration landscape. Certainly, we're speaking to making sure that budgets now take into account these additional work permit requirements. Certainly, if you have a traveler who, based on destination activity, duration of stay, needs to obtain some type of work permit, there's going to be added cost. There will be the legal and professional fees of a third party that may help you file that application. There are associated government fees with the application itself, filing fees, et cetera, that need to be taken into account. Generally, those range from maybe 200 or 300 euros per application to 600 to 700 euros, depending on the location. There's also supporting documentation that sometimes will come with a cost. So, if you have one employee going, certainly that will be an added cost. If you are looking to staff for a larger project and you have multiple individuals traveling, those immigration costs can add up very quickly. So ensure that, budgets take into account whether for, internal trips that may be taking place or maybe bid or larger projects that you may be bidding on in the future, to make sure that those take the immigration cost into account as well. There are, certain locations where if you register with the immigration officials, it does help facilitate immigration processes faster. The Netherlands, for example, if you register with the IND and you have a corporate file on account, your applications generally are processed much faster than those sponsoring entities that are not registered. So make sure that if a location allows you as a corporation to register for faster processing, that you take time to do that, because it will benefit you in the long run. Certainly, how you educate and how you individual travelers, as well as line managers, supervisors, local HR officials, make sure that you start an education process if you have not already, in terms of developing knowledge around what a business visitor can do based upon the location, and then when work authorization might be needed. Again, we are advising that each business trip be assessed, and certainly if you have a process in place whereby you've educated and instructed your local teams to review these trips, it certainly will help you with a smoother transition from not needing to worry about immigration to now focusing on immigration with every trip. You also need to make sure that you're keeping track of the activities itself for those employees who are regular traveling to the UK or to the UK, from the UK to the EU. Again, activities and the duties that the traveler will be undertaking is the #1 determining factor between needing a work permit and not, or being allowed to enter as a visitor. So certainly this is the first area of focus, and certainly something that you need to keep track of as well. Again, make sure that your traveling population understands how to calculate the 90-day rule of the Schengen allotment of visa-free stays. Again, this is from the date of entry, looking back 180 days. Of those PTO days, those weekend dates also count towards this 90-day period. So this is also something that you need to be educating your traveling population on. There's also, there are ways to obtain work authorization in one location and then use that work permit that to your advantage in other EU countries. So be creative in doing this. The Van der Elst work permit exemption, for example, if you, as an example, if you hold a Dutch work permit, you may be able to then use that work permit in another EU country for up to 90 days to work without needing a work permit. So be creative. We are starting to see also some of the European countries introduce short-term work authorizations or exemptions for ICT assignments. So if you're sending a traveler from your UK office to your French office, for example, there might be a short-term ICT exemption that would allow work to take place without needing a work permit. So make sure you look at the immigration options that are available based upon the destination. Be creative and use those to your advantage. And then also, as a final educational piece, get familiar with the work permit procedures for the locations that your travelers do travel to. Each country, has a separate immigration process. The requirements are different from country to country. The processing times themselves can vary, from a few weeks in some locations to several months in other locations. Some countries may require a local labor market test. Some may require, minimum salary requirements, minimum educational requirements. So make sure that you familiarize yourselves with the work permit options and what it will take to get the work authorization in place, because again, there isn't a set of rules that is consistent from country to country within the EU. Each of the member states must be looked at on an individual basis in terms of what it takes and how long it will take to get the work authorization in place if needed. And certainly with that, David, I know there's probably tax consequences, Social Security consequences as well, that also tend to follow all the immigration complications. So I will allow you to address those next.
Perfect. Thank you, Jason. Perfect. Yeah, no, that's exactly right. And from my perspective, whenever I have a client pick up the phone to me, dropping me an email and saying, we've got a new secondment, what do we do? The first question is, have you sorted out the immigration and the work permits? That's hugely important. Once you've got that sorted, it's then the tax and the social security that are arising as a result of these cross-border moves. This webinar is focused on Brexit, and actually, as a result of Brexit, the tax impact is very minimal from a cross-border employee perspective. The rules are broadly the same as they were before, but the real difference and the real change was around social security. So that'll be the focus of what I pick up today. Before sort of Brexit, before the 1st of January 2021, there was a lot of uncertainty as to how the rules would apply and what agreement would be in place between the UK and the EU. Thankfully, when all was said and done, a lot of similar principles were agreed as part of the protocol. So what that means is, as a point of principle, there should not be dual social security charges. And that was the real concern as we were heading up to Brexit Day without a deal. Thankfully, agreement has been reached such that social security should only be paid in one EU country at any one time, which was hugely beneficial to avoid those sort of dual costs. In principle, you pay social security in the country which you work. However, there are special rules where someone's posted temporarily to a country, or where they are a multi-state worker and they work in more than one territory. So there are some differences though before Brexit and now where we are now after Brexit. So some of it's terminology, which is easy enough to get your head around. Historically, where it was the EU regulations, and you had posted workers under those EU regs. Whereas now we're under the protocol and it's referred to as detached workers, which actually can help in some way, because there's a separate complication which we're not touching on today, an immigration aspect of the Posted Workers Directive, which is an immigration piece. So actually now when you're looking at someone who's on secondment, let's say from the UK to Germany, you're looking at those detached worker rules. Now, what the detached worker rules allow is for you to make an application for a certificate for a Form A1 to retain the individual within their sort of home country social security and avoid fragmented contributions. So someone goes from the UK to Germany for 18 months on a secondment. So long as they meet certain conditions, they could get this certificate and remain within the UK national insurance system. The biggest change from pre and post Brexit is that Pre-Brexit, you could have assignments, broadly speaking, of up to 5 years, potentially even longer, and have that certificate for the full assignment. So there was, you could either 2 years, you could extend it, and then you could make what was referred to as a best interest application. So in theory, it could go on beyond 5 years. Whereas the new rules, the protocol, it's got no flexibility. So it can only be applied for up to 2 years. As soon as you know you're going to be on secondment as a posted worker for more than 2 years, you'll flip into the host country social security. So my example earlier, if I said, a secondment from the UK to Germany, let's say for 3 years, under the old rules, you more likely than not to be able to get a Form A1 and remain within the UK national insurance system. Whereas as the rules are now, you would flip into German social security and fall out of UK national insurance, which can cause some complexities for businesses in payroll obligations, for the individual with fragmented social security contributions across Europe. It's worth noting that these rules required all the EU states to make, each country had to make their own decision as to whether or not they wanted to be part of these detached worker rules or otherwise. Thankfully, all EU countries have agreed to follow them, but in principle, they could opt out. So I don't propose to go into any detail on that now, but it's just one to be mindful of and be prepared should that happen in due course. You might not be a posted worker, but you might be someone that works in lots of different EU member states, including the and as well as working in the UK. Now, this is where I think there'll be more applications made under this approach, because it can be indefinite. So if you meet the right criteria, you've got the right working pattern, you could get a Form A1 that I referred to earlier indefinitely, so as a multi-state worker. So not going into too much detail here, you need to look at the residency of the individual, where they're employed, what they're doing in the host country. If they meet the right criteria and they have enough work duties undertaken in the home country, this would be the route that I would go down to obtain that certificate. One point of complication that we'll have right now is that there is a transition period still. So a lot of my clients and a lot of businesses I know brought their secondments forward to December 2020, because anyone that was already on assignment or already as a posted worker can be sort of grandfathered under the old rules. And particularly as a posted worker, that's beneficial because you might be able to get that Form A1 for longer than the 2-year cutoff under those new rules. HMRC from the UK standpoint have said that so long as there's no interruption to the secondment, to the working arrangements, you can continue to be grandfathered under the old rules. It's quite relatively generously defined in that the viewpoint, broadly speaking, is that an interruption is where someone stops an assignment for more than 30 days. That's quite a chunk of time before it resets, and the application needs to be made under the protocol and under the new rules. This is still bedding in. I've been a number of seminars and over the last couple of months when asking how many applications have people made under these new rules. Relatively limited. There's just not been that movement of people. But as borders start to open up over the next few months, we'll obviously start to see this in practice and hopefully see more insights and more guidance from HMRC. One health warning around the social security within the EU is that under the EU regulations as they were pre-Brexit, it also included additional sort of EEA states outlined on your screen there: Iceland, Liechtenstein, Norway and Switzerland. These countries are not covered under the protocol, and therefore rely on separate agreements again. Now, Liechtenstein is the biggest headache because there is no agreement between the UK and Liechtenstein for social security. So if you do have any moves between those two territories, you could in theory end up with a dual liability and additional complications surrounding that. Whereas Iceland, Norway and Switzerland, whilst a little bit more complicated, are not following sort of the EU rules. They do have agreements, so in theory there shouldn't be any dual contributions. So once you've understood the rules, you've thought about the immigration and the tax and the social security, well, what do you do with that? And I'll pass you over to Nishant to pick up.
Well, thank you, David. Thank you, Jason. Very, very informative. Really appreciate the insights there. So, with all of that, I think one of the common themes that I am hearing from clients, I think we heard a lot about this from Jason, is all about, okay, I used to be in a world where we had UK nationals who could just go into EU, and we really didn't have to worry about a lot of this stuff. But now we have to, and how do we get control over that? And I think that's a big topic of conversation at many organizations that have large UK presence, especially, and they have a lot of travel, as most companies do, into Europe. And so the question becomes, how do you manage all of that? How do we get insight into where are people going to be traveling, how much time they're going to be spending, as we heard from Jason, that it is non-trivial. This is something that you need to keep track of on a rolling 6-month basis. A number of different types of activities count towards it, including vacation time, personal time. So, if I was somebody who's going from UK to Spain, normally I would take a 2-week vacation during the summer or a 3-week vacation during the summer in Spain. And, before I know it, because I had spent a whole bunch of time traveling for work, to other EU countries, now with this 3-week vacation, I could have literally tripped that 90-day threshold. And so that is going to be very challenging, very complex, obviously going to invite a lot of scrutiny, as we heard from Jason, because of the electronic passports. How do we figure out a way to understand where people may be and how much time they're spending in different places and when they may be at risk? And I think that's where, as you think about, building out a program around this, to be able to keep track of where people are spending time, consider using technology. There is a bunch of technology that's out there, that's available, that can allow you to be able to understand the footprint of employees as they spend time in different parts of Europe, and the number of days that they're spending based on the different rules that the Schengen area has that allows you and the employee to stay on top of when they're spending personal time, when they're spending weekends, when they may be spending work days, and doing that automated calculation to make sure that that 183-day window is always being monitored, and that there is fair warning that can allow both employees to be able to know when they need to leave the Schengen area or when they need to be able to have some immigration or social security work that then allows them to be compliant as they continue to do work in continental Europe. So I think technology is going to become a big piece of this. It has not been a big piece of it in the past, but we haven't had this issue of needing to monitor days so closely and so in such a rules-based manner before, and at the volumes that are likely to come today. So with that, I'm seeing a bunch of questions come in already. I encourage everybody who has a question after listening to David and Jason to please do send in any questions that you may have that you've been dying to ask. Now is the time to send in questions. But let me, from the questions that we already have, let me get started. Maybe we'll reverse the order. Maybe David, I'll start with you. Start with the question around that I see here. So are there any other cross-border mobility aspects that you think that companies should be considering as a result of Brexit? What else have you seen beyond what you've already talked about, mostly social security?
Yeah, sure. Thanks, Nishant. I think I mentioned that the tax that hasn't really changed as a result of Brexit from a cross-border mobility perspective. But despite that, what has changed is particularly businesses in regulated sectors, or maybe businesses that have they might have been required to set up an entity on mainland Europe. They might not have had one before. The UK was their hub. They didn't need to have an entity on mainland Europe because we were part of the EU, whether it was financial sector or chemical goods. They were all under the same EU rules and regulations. But as a result of Brexit, they've required to set up an entity on the mainland. And I suppose what I've seen, therefore, is before you might have had UK business with UK employees and have those employees business trip across the EU and not trigger any tax or payroll obligations. What you find now is, let's say the companies has needed to set up in Belgium as a result, and that's where they've chosen to set up. By having an entity there, that may then trigger the payroll withholding requirements when that business trip commences. So as previously, no entity, business trip into Belgium, wouldn't necessarily have to file. Whereas now, with the entity, with those registrations, you're then potentially looking at a payroll obligation. So I suppose that's where I've seen an unexpected consequence, I suppose, of Brexit and needing to set up an entity on the mainland.
Okay, well, great. Thank you. I think that's a good insight. Jason, question for you. In the current audit environment, like it is within the EU, how are border officers reacting to UK nationals entering under the distinction of a third country national?
Sure. So good question. We have seen probably limited travel so far this year in terms of UK nationals traveling into the EU area for business purposes. But we're starting to hear stories of border officers being very strict once they see a UK passport. They are starting to ask UK travelers, probably more detailed questions than they might other third country nationals. I guess having not answered those questions or faced those questions before, we're hearing back from clients who, their employees are not sure how to actually ask or answer those questions that are being asked of them. And they, might be taking too much time or providing too many details, which then leads to follow up and secondary inspections. We've also seen, these rules and regulations for the border officers themselves as applicable to UK nationals are also very new. They're facing these for the first time as well. And we're starting to see the same rules, regulations interpreted and applied to, very differently, by even the same locations. I, for example, know of a client who about a month ago was sending visitors to Germany. A lady entered on a Monday, for example, with a support letter of introduction, was allowed entry without you. The following day, one of her male colleagues entered, same support letter, same type of response to questions, and he was denied entry altogether and sent back to the UK. So we're seeing border officers, interpret the rules differently. We are seeing, much stricter, I guess, focus on UK nationals. And then we're also seeing site inspections taking place. And generally, site inspections from immigration officials have taken place, maybe at construction sites and retail stores, maybe restaurant scenarios, but we're seeing those immigration officers start to show up in more corporate environments, in corporate offices that are open at this time due to COVID. So they are, again, looking to see where UK nationals are traveling to based upon the passport scan, and then the questions they ask, and then following up with site inspections to ensure that, no work is being taken place. So at this time, the audit environment is quite strict, all things considering in terms of COVID restrictions and office reopenings.
Thank you. I appreciate you sharing that. David, I have a follow-up question to what I just asked Jason for you. If let's say we had a UK employee who was actually a Spanish national, but they were going to France for 3 years. Are there any exceptions for EU nationals to be covered longer than the maximum 24-month period as it relates to Social Security in that kind of situation? Is there a special exception for EU nationals going to the EU country?
That's a good question, Nishant. And I saw that question pop up, and I'm not aware of any further exemption on top of that. So I have got some hairs racing internally to double check. From my perspective, if that was the case, then we probably would have needed to agree the reciprocal with the EU. I don't see why the UK would have agreed to that as part of the protocol. So that's one to look at, but nothing I'm aware of at the moment.
Okay, thank you. Maybe a question for both of you. We've been talking a lot about business travel. Obviously, business travel, there's a lull in business travel for obvious reasons right now. In my own work with a number of clients, almost every conversation seems to have some aspect around remote workers. So, you may have been, a German, you may be a German who's been living in London, working for a UK employer, and during the pandemic decided to go back and be back with family in Germany. Have you seen that much happening with your clients, and how is Brexit impacting any of that, and what are companies doing to deal with that?
I will take that first, Nishant. I think that's probably one of the biggest headaches that my clients are facing, and I'm facing as well. Again, wanting or allowing individuals to work remotely, and then those individuals wanting to travel to a third country location to do some of that work. So again, there are no immigration exceptions in place currently, and so the UK national would still be subject to that 90-day, 180-day rule. And then you're also looking at the activities themselves. There are some locations where working remotely is okay if certain conditions are met. For example, if they're not being paid from a local source within the EU host location, if their work is not touching the EU country location in any way, if it can be shown that they're not taking a job or an opportunity away from another EU national by performing that work, remotely from, a home, then generally, I would say more times than not, the working from home in a third country location would be allowed. But again, these cases are, complex and need to be assessed on an individual basis, because each EU country will have a different approach to working from home and what that employee can and cannot do to maintain that, visitor status. But again, at the end of the day, you're still bumping up against that 90-day allotment of stay. And so even if you can work there, we're not looking at maybe very long-term options in terms of beyond the 3-month mark at this point.
Yeah, no, I think on the remote work, it's very topical, hugely topical. Yeah, I think my day-to-day work has moved away from some of the more formal secondment programs over the past year to more initially firefighting with workers either stuck overseas because of the planes not taking off. And then once borders started to open, people thinking, well, why do I need to go back to my home country? And why do I need to travel back? And Jason's picked up on the immigration aspects, and there's obviously clear reasons why. But we've gone from that sort of firefighting, how do we remain compliant, to where we are now, which is actually we're working very successfully. Why do we need to narrow our talent pool by only recruiting from the UK or only recruiting from the US? What if the best person for the job is in Chile? Why can't we recruit them? So that's certainly where things are moving. That talent, find the best talent, doesn't matter where they are, and let's make it work. There are complications, so it's a balance between time commitments to get it right and the will of the business to have that policy in place.
I appreciate those insights. I'm going to come to a broader question in just a moment. I have a few other, very specific tactical questions, but very interesting ones. So one's a question around, one is a question around interns. I guess summer is coming up, so it's top of mind for a lot of companies. So the question is there, I believe there is a graduate route visa in the UK coming into effect in the summer. In the interim, what are the options for hiring interns from EU other than a skilled worker visa? So Jason, I guess this is for you.
Oh goodness, and I'm no UK immigration expert without looking into this a bit further with our office in London, but I do think there's now I think it's called a Tier 5 program in place under a government authorized exchange program, which is more of an intern program for up to 12 months. So it would allow an internship to take place for up to 12 months. But in order to do so, that EU national would have to obtain this type of Tier 5 visa. And again, the company in the UK would need to have a sponsorship license and would need to have a certificate of sponsorships in place under the Tier 5 category. And so, I would say for an organization looking to make sure that their internship program can take place this summer, first you would need to make sure that you have the UK sponsorship license in place, make sure that you're set up to sponsor foreign nationals under this Tier 5 category, and I think it's called Government Authorized Exchange, the GAE visa. And then if so, then the COE can be issued, and it generally will then allow a stay and work authorization for this internship in the UK of up to 12 months.
Okay, great, thank you. David, question for you. So as it relates to A1 certificates, so would the same restrictions apply to short-term business trips? So let's say 2 to 3 day business trips that are happening from the UK to the EU countries. Would they also need to apply for an A1 form going forward? I mean, I think the UK was never very clear on the A1s. Has that changed post-Brexit? What's the status there?
Yeah, you're right in that it's yes, you would need to apply, but it is country by country specific. So every country within the EU, despite historically under the EU regulations and now under the protocol, has their own thresholds as to when they expect a Form A1 to be applied. So, for example, pretty certain Germany, for example, it is pretty strict on this. 1 day in Germany, you need a Form A1. Whereas someone coming into the UK are probably a bit more relaxed. If someone's here for 1, 2, 3 days, I wouldn't expect the UK authorities to really pick a fight on that, as long as you were keeping track of the individual and you understood, that they were here, you've considered it, and you've not taken action. But you do need to look at the territory as it is. I think the reason why Germany is so strict is because their application process is via the payroll. And my understanding is it happens within 24 hours. The UK process takes anywhere from 4 to 8 weeks, depending on whether you applied online and the resources at HMRC. So it doesn't quite tally to put that effort in for 2 to 3 days. A company then also needs to consider their capacity to actually deliver on it for those 2 to 3 days as well. But certainly look at the territory you're going to, local implementation guidance, but your strict position is, yes, you should be looking for Form A1, even for a business trip.
Yeah, I think this maybe, I'm going to do a shameless plug here. For anybody who is interested in learning more about how to automate the process for filing for A1s and post-worker notifications, Topia and CIBT/Newland Chase has built a really powerful technology that automates a lot of that. And so if anybody's been struggling with A1 certification, posted worker notifications, immigration assessments as it relates to immigration anywhere, but also specifically in the case of Schengen, then absolutely encourage you to look at some of the stuff that we have built that can really help streamline some of these processes internally, which I know the companies have been dealing manually, which can be quite painful. Another question here, and I think, Jason, I'm going to go back to you for this one. So, obviously, we're talking about, 6.25 million trips from the UK to continental Europe in years prior to the pandemic. We talked about, how we need to monitor these trips. A lot of these folks may need visas, potentially may need work permits when they now go to Europe. That's got to be a significant budget impact for most mobility groups that they have not had in the past. I'm curious to hear, just from your perspective and whatever you have observed thus far, which, I know it will evolve as the world opens up. I'm just curious to hear from you, how are companies thinking about balancing that additional budget they may need with the compliance risks that might come?
Sure. And I think, unfortunately, for many of the clients I've been working with, budget was not an area that they may have been focusing on in the years leading up to Brexit. They were, preparing for the immigration, the requirements, the tax requirements, et cetera. But I don't think they realized maybe the cost associated with these compliance pieces. So, certainly I think anytime we have assessed a scenario and we recommend a work permit, we certainly see clients often push back to say, what can I do or what can I not do to make sure that, I don't need this work permit because, there simply isn't a budget for that. And I think it really comes down to the mindset of the client and their, risk. I think certainly generally, cost is less of a factor for the final determination for a client than just the processing time itself. It's one thing to have to pay the filing fees, et cetera, but it's another thing to have to wait 4 to 5 to 6 weeks or longer to get the work authorization in place, and maybe having to come to a customer and say, we actually can't start this project for 2 months based upon the immigration requirements of needing work permits. So so far I haven't seen budget really hinder clients from getting the work permits. I think it frustrates them more than it actually hinders them. But where we are seeing it really be impactful are those scenarios, where it is, a large scale project that may involve dozens of employees or maybe hundreds of employees that are coming into an EU location to work on a particular project. And when you are dealing with multiple employees, those government filing fees, professional legal fees add up very quickly. And generally, a client may not have added those additional costs into their initial bid. And they're starting to see that the immigration piece is really, I guess, taking it from their bottom line in order of, just the fees that they're paying is money out of their own pocket. So I think, certainly clients have learned from that. I think we are now being asked by these types of clients to be involved at the bidding stages. So, whether or not a work permit is needed is not really the question, but if it is needed, what are the costs? So we can start bidding that or, adding that into the bid ourselves to make sure that, that's not a loss for us in the future. So again, I think so far cost, especially on an individual traveler basis, has not been a determinant as much as just the processing time itself. But I think certainly as travel starts to resume and clients and employers are having more and more employees travel, again, those costs, even if it's just for a single traveler, but if you have, your entire organization now traveling again, again, you're going to see costs rise significantly in terms of just the added travel cost. So certainly start budgeting for that, now, and certainly for next year's budgets as well. If you're working on your 2022 budgets internally, because unfortunately costs seem to never go down, and we'll probably just see filing fees and all the other costs associated with immigration continue to rise just with any other field.
Yeah, no, that's thank you for sharing that experience. One of the things that you talked about on one of your slides was keeping track of the activities that employees perform when they travel, when they travel across borders, and to keep track of the number of days that they're spending in different countries. How, what is your guidance to clients that you work with about how do they balance the cost of, the compliance, the time and the complexity of compliance versus doing that tracking?
Sure. So certainly, at the very beginning of any new process, there's going to be time needed to set that process up. And, a lot of clients may be frustrated that, now that we're tracking days, we're tracking activities, we're doing these individual trip assessments, it's just taking more and more time. And I can't do the rest of my job, or it's becoming too complicated. And it's just, you may be too complex to keep up with. But what we're advising our clients, and I think it, is applicable whether you're talking immigration or tax, is if you put in the time now to educate yourself and to set up these tracking tools, it certainly will start to pay off very shortly. If you have individuals, if your travelers tend to do the same type of activities over and over, and if you take time to do a proper immigration assessment, for performing these activities in France, for example, then you can use that knowledge, down the line for all your remaining travelers. If you are, going to multiple jurisdictions and you're trying to come up with an immigration strategy that will maximize the duration of stay in each of those activities, and you're counting the days, you can use that same travel itinerary and that same planning process, for future projects as well. So certainly, now that, tracking of days and tracking of activities is relatively new, I think it probably does seem like a mounting task for clients, but we are telling clients to put in the time now, educate yourself, set up these processes, especially now that travel is not probably as high in terms of volume as it will be, hopefully in the coming months, in the coming years. And you simply may not have the time to properly set up compliance tracking at that point. So use this slower period to educate and get these processes in place so that you can quickly scale up to meet the demands when travel is happening again. And those 6.4 million trips a year or whatever you'd mentioned earlier, that's a lot of trips to keep track of. And some organizations have hundreds of travelers each week. So take the time and use the time now to put in those processes and use those and scale up in the coming months.
Any guidance on that for our audience as to how do they get buy-in internally? It's always hard to get things in place when you're not seeing the everyday impact of that. It's not till the house is burning that you go buy the fire extinguisher.
Exactly, and you buy the buckets for the water hoses. Certainly, if you don't have the internal resources, you can reach out to a provider such as Newland Chase. We're happy to set up those processes and provide you, some best practice tips in terms of how other clients are dealing with the situation. We also are saying, talk to colleagues and individuals that you may be familiar with within your industry yourself. Share the knowledge either internally with a third-party provider, with a third-party competitor. I think we are all in the same boat together. We all want to get the fire out as quickly as possible. And it truly can be a group effort to, get any fire under control. So, use those resources that you do have. And if not, don't be afraid to ask for help. I think the sessions that you guys at Topia have been presenting are great educational sources as well that clients can take advantage of. I think your technology also is very excellent. So again, if a client may not have the internal resources, there certainly are, the tools such as Topia's to be put in place to take a lot of that burden away from the individuals in-house.
Well, I appreciate that. Thank you, Jason. Well, that's all the questions that I have from the audience today. David, Jason, thank you very, very much for joining me. I know this is a topic that's top of mind for many folks. Hopefully, folks in the audience, you found this very helpful. I think Jason, David, and my contact information is up on the screen. Please do not hesitate. We're very happy to share any specifics that may be pertinent to you and your particular situation. Happy to jump back on as a group or individually with whatever it is that you may need. As Jason said, we're all in this together. We're here to help you think through how you can make sure that your organizations continue to grow their business, as well as keep your employees and the organization safe and compliant in the process. So please don't hesitate to reach out. Thank you for joining us today.